Fed meeting day. It's actually funny how this works. So the Fed cuts interest rates, the Fed raises interest rates, and as loan officers, we get tons of text messages, hey, are interest rates falling or interest rates rising? But it's interesting. Did you know that the Fed interest rate does not directly affect mortgage interest rates, right? The Fed cutting interest rates is more tied to where banks are lending. It does affect HELOC interest rates, but it doesn't affect mortgage interest rates. That is true, but we've talked about it in the past. The Fed and the decisions that they make absolutely affect the macro economy and absolutely affect the direction of mortgage interest rates, right? But it can still have negative effects. Let's take a look at an example. Last year, interest rates, I think it was around September, October, Fed cut interest rates for the first time during that cycle. Remember, 2021, we had zero policy. We hiked interest rates all the way up to 5-6%. Then we cut interest rates, right? You go through that zero policy, rate hiking cycle, rate stable policy, and then you still have this rate cutting cycle. We cut interest rates last time, but then mortgage interest rates actually spiked about 0.5% last year. So it had a negative effect. So obviously the Fed cutting rates does affect the general trajectory of mortgage interest rates, but it can actually head both directions. So today, let's go ahead and recap what it did for interest rates. So today, Jerome Powell and crew came on. They actually cut mortgage interest rates down by about 25 basis points. Yes, again, that means HELOC interest rates move down, credit card interest rates move down, mortgage interest rates could move either direction. And the way mortgage interest rates move is more on the dot plot, and it is more on Jerome Powell's comments, right? Does he believe the labor market is weak? Does he believe inflation, although sticky, is eventually going to come down, or vice versa? Oh, hey, labor market, we're showing some weakness, but we believe it's actually perceived weakness that isn't necessarily true. Or hey, inflation is continuing to head in the wrong directions. Those are the comments we're looking for. Because if he's saying inflation continues to head in the wrong direction, even though we see a Fed cut today, mortgage interest rates actually move up, or vice versa. Hey, we are starting to see stability in inflation. We're starting to see a weaker. That is when interest rates move down. Today, and it's funny, as I mentioned, all this move, there's about 8 Fed meetings a day. Those 8 Fed meetings are incredibly important. They're actually some of the most volatile days in mortgage interest rates. However, today, pretty much nothing. Jerome Powell came on, talked, we saw the dot plots almost mirrored last, and mortgage interest rates remained almost the exact same. A little bit in the beginning, kind of moved up, kind of ended the day right around flat. So what he said and what we're looking forward to is data-dependent Fed. That is what we're looking for. We're looking for the data because the data rules all. We haven't seen much data the last 3 years with that government or the last 3 months, with the government shutdown. And then a lot of the data reports started coming out super late. I believe it's next week, Wednesday, we're going to see non-farm payroll. We did see the unemployment rate move up to 4.3 to 4.4%. Jerome Powell did mention that today. He said, hey, we saw unemployment rate is in fact going up. The question is, what will the unemployment rate be? This is still delayed data. So it's not going to affect interest rates as much. So realistically, I'm thinking we're going to get through the end of the year relatively flat, right? Right now we're ranging between 4 to 4.2 on the 10-year Treasury, which is where interest rates are really gauged off of. I think we're going to be right around that range for probably the next 15, 20 days. Then starting the new year, then we'll make some decisions. In addition, big key part, Trump is going to be nominating his next Fed chairman likely between now and the next Fed meeting. Next Fed meeting, January 30th, January 20th, I don't remember the exact date, right around that time. So this is likely the last time frame where Powell will be able to talk and not have a new chairman, chairwoman to be chair election coming in May. So it'll be interesting to see how that works its way out in the January. So as I mentioned, interest rates relatively flat, probably going to be flat the rest of the year. And then I think we get some data, then we'll likely move. If you have any questions, feel free to reach out.